Hey folks, Dave Frio here, the rate update. Today is March 22nd, 2021. We're gonna go over what happened with rates today. It was good news. And there's some things that are really freaking people out, like forbearance, house prices and such. So we're gonna address a few of those as well. So don't go away, we'll be right back. Here's the topics that I get most asked of every day. Dan, where are rates going? How do I get out of forbearance? Because we're getting statements in from people saying they're $10,000, $15,000 past due. It's going to be a debacle on all this because you're entered the forbearance, but there's a lot of people showing up as late pays, late this, late that. I haven't had one client continue to make his payments and then he got a notice of foreclosure. So there's a mess in this whole system, but that's why I ask everybody, if you're in a forbearance right now, please reach out to us. Let us at least review what you have and try to get you an exit strategy one way or another. I'm not saying we can help everybody, but at least we can give you a peace of mind what your options are. Okay, that's number one. Number two, we want to address, and I got videos on both these issues coming out this week. If you're building a home and you're freaking out because the house isn't going to be done for 4 to 6 months or 8 months out, and your lender will not lock you in, there's many states that I'm in that we can lock in your rate up to 1 year. Not in all states, but many states we can lock you in for a year. If rates drop, then we can re-lock you, or we can do what's called a float down to that lower rate that we'd offer at that time. We have to be within a 60-day time frame of you closing at that point, but we can have a one-time float down on that. So that being said, you're locked in now. The rate is a little bit higher than what today's rate is on a 60-day lock, obviously, because you're going out 6 months, maybe even 12 months in some cases, but you know what you have. It's like an insurance policy. So you're going to take that a little bit higher rate, but down the road when you're getting closer to closing, we'll relook at all the numbers, and if we can float you down to a lower rate, we'll do so. There's a lot of caveats between all of this, so you need to give us a call so you can talk with us personally to get all the specific information on your situation. So that being said, let's go on with what happened with rates today. So the headline numbers, or the headline is, and I'll have this posted here shortly, is not a bad day, but we need some convincing. So you're going to see that the MBS prices were up. They were up decent as well, but we need a carry through because it's like a seesaw. It's like the NASDAQ. One day it's up 500, the next day it's down 400. The next day it's up 300, the next day it's down 400. It is all over the map. Okay, so that's what we focus on that in that area there. Then there's another area right here. This is the forbearance thing. People are really, really concerned when this is all said and done. Now they're getting to the end of March. We got 1.2 million people, 1.2 million loans in forbearance that are starting to come due at the end of March. So please don't stick your head in the sand and just hopefully it all works out for you. Please call us so we can give you some consultation around this to give you all in any of the options that you have available to you. Okay, so that's why I want to stress there. So now let's get on to what's going on with rates today. MBS market, nice day. We had a nice day today, up 28. We're off its highs, which is a little concerning because it's, again, as the headline said, can we carry through for a couple days and get a little recovery here? Okay, the nice news here is the treasuries are starting to ease back. And again, you guys, if you go in the past, I never brought up treasuries because their yields were completely irrelevant at the time. Now, again, U.S. treasuries do not have a direct correlation to mortgage rates. It has a trickle through in regards to other bonds. And a mortgage-backed security is a bond that trades. And this mortgage-backed security is the biggest component when it comes to your mortgage rate, the yields on mortgage-backed securities. This number right here that we follow, this is what's going on to the price, not the rate. What's going on with the price of the bond? As the price goes down, like we've seen for the last month or two, as the prices go down, rates are going up. Rates are on average about 0.5% higher than where we were 2 months ago. Okay, so if you haven't done anything yet, please look into it because most people that are sending me in their statements are in about 4.25 to 5.25, in that range. Most of them are in the high 4s to low 5s, believe it or not. So let's at least give us a call so we can go through all the options that you have to drive down that payment to get the lowest rate you possibly can. So that's what's going on right here. We're going to go through the economic calendar here in a second, but the thing that's playing a huge role in the mortgage-backed securities market, as well as the bond market, as well as the stock market, is the Treasury yields, inflation, what the Fed is doing, and the coronavirus. It's I hate to say it, but a lot of corporate earnings and a lot of other reports aren't really mattering these days. It is the basics. When you scratch it all down, it's what's the Fed doing, what's the government doing, what's the coronavirus, what's the activity there, and what's inflation looking like because of the stimulus packages. So that's what we're monitoring. We're not monitoring a lot of other details that we normally monitor. So let's go to that. Let's skip to the economic calendar for the week so I can show you what we normally monitor, so I can give an expectation of where rates are going and why they should be going there. Like this today, we had Federal Chairman Powell. He spoke. He's speaking tomorrow. He's speaking Wednesday. It is the Federal Reserve week, basically. And the tough thing with him speaking is every word he says is put under a microscope. So if he says one word, just one word that's kind of you can see the markets really make a move on that. Okay, so the other things that came in and affected today's situation is existing home sales. They're down. Okay, that's a first down month in a long time. Well, the good and bad news behind it is there's no inventory. So houses can't sell if they're not on the market. Okay, so that's one of the biggest things. Tomorrow we're going to get some other housing data, which shouldn't really affect the markets at all. And then we start getting into some areas that the Federal Reserve monitors, such as durable goods orders. Okay, Federal Chairman Powell speaks as well. We have a 7-year Treasury auctions going out on Wednesday. Thursday is the 7-year auction. Last month, the 7-year auction went really bad and mortgage rates spiked. So we're going to monitor these two events this week as well. You also come up with initial jobless claims and continued jobless claims. Those do play a huge impact in what the Federal Reserve plans to do. But then right here, this is the personal consumption index. This is the figure or the component that the Federal Reserve watches to monitor inflation. Okay, inflation is the big buzzword right now. It's hurting stocks because it deteriorates their earnings. It's hurting a lot of other areas because it is it was going to say, is there inflation? Sorry for my stuttering. So this is basically what the Federal Reserve watches. This is the key component they watch. So Friday's going to be a big day. So every day this week we have some news that could really affect the markets. Again, today was Federal Chairman Powell. Tomorrow's Powell in a 2-year auction. The next day is Powell, a 5-year auction, and durable goods orders. The next day is jobless claims, continued jobless claims, and the 7-year Treasury auction. These are when they put up a whole bunch of treasuries on the market for investors to buy. And it depends on how the appetite is for those purchases on what's going on with the Treasury yields or rates. And then Friday is the PCE, which is the component that the Federal Reserve watches to monitor inflation. So sorry about my stuttering, guys, but that's the recap of the week. Every day is action-packed, so we're going to stay at the edge of our seats to monitor this for you guys. So now, what are the rates throughout the country? Okay, these are not my rates. These are the average rates throughout the entire country. So I want to go through those so you guys can get a feel for what's my benchmark. If my benchmark is this, can I get better than that? However, what you got to realize is this is the average. Your rate might be a little bit higher than this. Okay, the reason being is you might have a little bit lower score, you might have a higher loan to value, and so forth. However, if your rate is a lot higher than this, or a lot lower than this, please be concerned. Either one, you might be paying too high of a rate and or fees, or two, you're getting bamboozled and you might be paying you might be getting a rate that's way under market, but then you flick to page 2 of your loan estimate and it's like, whoa, that's how I'm getting it, because I'm paying a ton of money in points. So that's what we want to monitor for you. So that's why I just throw these numbers out here for a benchmark, just so you can monitor this, saying, okay, my rate currently is this, or the quote that I got is this. Where am I in this realm? And we would love to reach out, or for you to reach out to us to give us, either a copy of your mortgage statement or a copy of your loan estimate, so we could review it for you and with you to let you know if the deal you're getting is favorable, or can we do better, or can you do better? And I'm going to discuss that here a little bit more in a minute. But right now we go through the 30-year Treasuries, Jumbo, FHA, and VA. Okay, the conforming is 3.35, 3.26 on the Jumbo, 3.34 FHA, and 3% on VA. The difference is right here, we could say a one-day delta is basically a one-day change, 7-day change, 4-week change. Okay, you can see in one day we basically nothing. We'll just keep this 0 because 1 basis point equates out to 0.01. Okay, 2 basis points would be 0.02. So basically irrelevant. You have a 7-day factor, we're getting there. This is a 0.1 difference. So if your rate was 2.5, it's now 2.6. Okay, so that's it. Here's where the big move has been, and it's even been a bigger move if you take this out over an 8-week time frame. But over the past month, we're up about 0.3 to 0.35 on average across the board. That's 3/8 of a percentage rate. That's a big move for a month. Okay, usually you don't see that. The good news is the bad news is we're in an upward chart, which we're going to be, guys. We're in a recovery. So these were the lowest rates ever in history to get us out of this pandemic, to get us out of the world closing. So now as we recover, everything should get back to normal within the next year or so. That means higher rates. Or think of it this way, rates getting back to normal. I'll put it that way. But last year at this time, rates were in the high 3s, okay? We're still in the low 3s. If you scooch this back a little further, we're in the high 4s, low 5s. So we're still, on average, probably 1% lower than what you have. So that's why it's still probably a very, very good time to look into refinancing. But I can't help you unless you reach out to us for help. So let me go over how you reach us, or who should be reaching us. Okay, so again, if you're buying or building a home, reach us. Because if you're buying or building, it depends on the duration of time it's going to take you to close, on how long of a rate lock you need. Here's what I mean by rate lock. Here's an example, a good example for you. I like Google stock, so I watch it, and I watch it, and I watch it, and it's moving and moving. That's when you're doing that with your mortgage rate, it's called floating. You're just watching it. However, when I think there's a good spot to buy Google, I buy it. When I like my rate, I lock it. Okay? When you buy the stock, you own it now. When you lock in the rate, you're locked in. However, that lock has a duration time. It could be 15 days, 30 days, 45, 60, 4 months, 6 months, 12 months. It depends on that time frame. During that time frame, you have to get fully approved and closed and funded. Okay? Most lenders will lock you in for 60 days. So you're building a home and you're like, Dan, it's going to take me 4, 5, 6 months to build this house. What are rates going to be 6 months from now? I don't know. Nobody knows. So that's why we have a program, and it's available in a lot of states, not all states. We can lock you in up to 1 year. Okay, so now you're locked in. So you're like, well, Dan, it's a higher rate than I'm paying today. Well, yeah, but you can't lock today. So what's the rate going to be 6 months from now? Don't know. But if you lock in today, you know. Okay, so now the flip side of this. Let's say rates just tumble again. Well, you have a one-time option to float that rate down to what our current rate is at that time, and relock at that rate for a duration of 30 or 60 days, right? So we do that right at the end before you close. So you're basically hedging. You're saying, okay, I'll lock in now in the event that rates skyrocket, or if they come down, I can do my one-time float down. So that's a pretty simple process there. The next thing is, if you're in a mortgage now, there's 1.2 million people in forbearances. So if you're in a forbearance, you're probably If you're not, you should be concerned. What's your exit? How do you get caught up on this? What happens when the forbearance is over? That's why I need you to call us. We'll guide you through. Every loan is a little different. Every lender that you're working with or servicer you have is a little different. Every loan program that you might have. FHA, if you're in an FHA loan, there's a different way to get out of forbearance. If you're in a VA loan, different way to get out of forbearance. I have videos on all this coming out this week, and I hope you find a lot of value in that. But so now you're like, okay, Dan, how do we get a hold of you? I like what you have to say, but I need to get a hold of you guys so you can give me this exit strategy or lock me in for a long term or whatever. The best way to do that is go to therateupdate.com, and you're going to scroll down to the bottom. This is the fastest way to get us. Just 1-844-775-LOAN. It's 844-775-LOAN. Or you can schedule an appointment online right here. This goes into my calendar. You can schedule a 15, 30, or 60-minute appointment. And just click in here and it'll find the date and time available for me and you to get together. We usually do that via Zoom or a phone call. Or if you want to just click through online, you can click here to get our mobile app. It'll launch you right to the mobile app. It's a really cool system. If you don't like the mobile version, you can click here and do the online version. Be right on your desktop or your laptop. That's the easiest way to do that. If you want to go through like a little survey or a little test thing to say, okay, I really don't know what I'm looking to do, but I just want to go through and based on, you're going to get about 12 to 18 questions here. Based on the answers to those questions, it'll help me and you find the perfect program that you fit into. This is the program for refinances. This is for purchases. Or if you just want a rate quote and somebody will email you, text you, or give you a phone call directly, just click here, put in your information. It'll come to me. I'll get you assigned or call myself. We'll go through any and all questions that you have. So that's it for today, guys. If you're in the process of the refinance and you have a loan estimate. That loan estimate gives you what the loan amount is, the rate, the term, if you're locked in or not, all your fees and everything. Send me a copy of that. Email that to me. My email is dfrio, so D for Dan, Frio is my last name. So dfrio@preferredrate.com. Thanks, guys. Take care. Please give me a thumbs up. Let's see if we can hit like 200 or 300 thumbs up today. Subscribe down below. Hit the bell so every time I post a video, you get an alert. God bless, guys. I'll see you tomorrow. Bye-bye.